Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On the eve of the US Federal Reserve's rate decision, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded and resets its 5-month peak, climbing to 106.35 after the surprise rise in US wage pressures, which weighed on the broader markets. The decline in the US consumer confidence to the lowest level in nearly 2 years and the higher than expected wage growth for US companies rattled investors on Tuesday, leading to losses for the Australian dollar. Although the high wages are beneficial for US workers, they also create inflationary pressure, which could impact the Federal Reserve's timeline for potential rate cuts. Ultimately, as the market speculates on the Federal Reserve's next move, attention is on Wednesday, or Sydney, 4 a.m. Sydney time, to the conclusion of the two-day Federal Open Market Committee, or the FOMC, which widely expects the Fed to keep rates on hold at 5.25% to 5.5%. Additionally, investors are waiting for the April's job report on Friday, which is expected to show a tight labour market, with the non-farm payrolls forecasted to increase by 240,000 jobs. Turning to the technical aspect, as you can see, due to the heavy fall in the Australian dollar, has now given some concern to the downside. However, with the 64.65 level intact, I do feel that the market should rebound from this area and look back towards 64.95 and maybe on to 65.35.45, where the 60-day moving average is. Moving on to the euro, we can see the market has pressured the downside once again and looking towards that support level of 106.15. And while intact, I do feel the market should reverse from that area and look up towards 107.10, and a break there should give further scope up towards 107.60 to 108.20.25. Although the technicals have broken down somewhat, let's see if the support can hold at 106.15 and therefore see the initial drive to the upside. Besides the US data, in the Eurozone, we got the Consumer Price Index, or the CPI inflation data for April, and also the first quarter gross domestic product, or the GDP figures, which are also scheduled to be released around the time of the US Fed's interest rate decision. The whipsaw price action is once again back for dollar yen, as it experiences high volatility, particularly since the surge above the 160 level and posted an engulfing candle, marking its highest level since 1990. That was on Monday. Given the uncertainty ahead, I still have little view to the upside since touching the 160 highs. However, the downside I still view, and that is a break of 155.5, which should give further speculation to the bearish case and lead on to 151.5. Although we did break it, we didn't close beneath it, so still wait for that break. Technically though, keep an eye on this RSI. If it breaks through the midway point, could strengthen the bearish case. A whipsaw price actions for sterling, and erases the previous day's gains and now puts a little bit of uncertainty into the coming session. That said, while 124.60 is intact, then I feel the market could stage a recovery back to 125.35 to 125.70 and reassess from there. Gold was crushed overnight as it takes out supports all the way down and now removing the level of 2,288, which has potentially opened the path wider to its trajectory seen at 2,250. Heavy technicals still weigh on gold, so therefore should put initial pressure on the support and also potentially reaching its objective. Any upside attempts expects to see a cap anywhere from around 2,302 to 07. And wrapping up with oil, we're very close towards the support level, which is seen at 80.50 a barrel. There is some speculation here as well, with a shoulder, head and shoulders, that this could be the neckline, and a break there would give a measured move to somewhere around $70 a barrel. But one step at a time, I would like to see this divergence a little bit more to the weaker side of a bullish recovery. And also with a break on the neckline, let's see if it can take out that next level, which is a key point of 78.5, which would lead on to a further bearish call. Any upside attempts sees resistance around 81.5. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.